Welcome back, family.
Ooh. Hit the robot. Hit the robot.
That was a robot?
It was a
mini
again? Robot. It was a mini robot.
Okay. You got some real WD-40 in them hinges because it's moving smooth.
I'm telling you. I did my stretches before we started this video. Anyway, today's video topic is going to be on our rates, mortgage rates. Are they going up or down? So a lot of people have been asking me this question as a loan officer. Yes, I am licensed. MLS number 183003.
In New York.
Yep, I think that's my rating, MLS number.
Here.
You have to make this disclaimer because as a licensed loan officer, sir, we are allowed to talk about rates, but you're not really supposed to sometimes. It gets funny with the
because the way rates change.
Yeah. So I'm going to give you an overview. I'm not going to say actual numbers, and I'm going to give you a little historical data, right?
Ooh.
So this is not non-scripted, so all my information might not be 100% accurate
at the point in time that you watch the video, but it is accurate now, right? Okay.
For the most part.
Oh gosh.
So let's start with this. Right now, in this time period, the last 5 years, as long as I've been doing loans, so the last 3 years, the rates have been historically low. And I mean that from compared to what interest rates used to be. So interest rates used to be a standard of, I think, 12, 19%, or even 8%. That used to be a standard interest rate. So the last couple of years, we've had these really good rates. So it's extremely low. But we've gotten to the point where rates have been down to 1.99 on a 15-year. Meaning that people are like, oh my God, this is phenomenal. This is super great. But historically, it's not been that low. We've just been in a really good time period. Now, after COVID, rates did go down, they went up, and they started fluctuating because the market had uncertainty. And uncertainty in the market reflects in the rates. Now, this quarter, meaning the next 3 months, January, February, March, the rates have slowly started increasing. We're seeing rates going to the 4s now. Next quarter, the Feds, not me, the Federal Reserve has been quoted to state the rates will see an increase. That's not me. It's Federal Reserve now. These are people who dictate the interest rates. So they're already saying that they think the rates are going to go up.
Even more.
Exactly. Then it's already going up now. So what does that tell me? That means if you're a loan officer or you're a home buyer who's looking to buy, hurry up and tell your loan officer, lock my rate in now. Find a house, find something that you like, and lock the loan as soon as possible. Because if you don't, when the rates tend to go up, which the Fed say that's a high possibility of it doing, you'll be paying more for the same amount of house. Meaning, if your pre-approval, the loan officer gave you one and you were pre-approved for $300,000, but at the interest rate he quoted you at was 3%. Now, when the interest rate is 4 or 5%, that $300,000 is going to go down to maybe $275 or $250 because the interest rate increases, meaning you have to pay the bank more money for the same amount of house that you were looking at. So now instead of a $300,000 house, you might have to look at a $250, $275, meaning your pre-approval amount went down due to the rates increasing. Does that make sense, Michelle?
Yeah.
Did I explain that clearly? Now, how do you combat this? The simple thing is what I just told you is to get your loan officer to lock your rate in as soon as possible. Now, as loan officers, once the file is submitted, we have the option of locking the loan, meaning we can say that, hey, bank, my client, my borrower wants this rate, the rate that you're giving now, the 3.5, we want this. The bank then says, okay, cool. How long would you like this rate for? How long would you like me to hold and guarantee, keyword, guarantee this rate? Meaning, what does it guarantee? It means that whether the rates go super down, so if the rate goes down to 2.1, my borrower's happy with that. If the rates go to 7.7, you can't give me that. My borrower was guaranteed this rate at 3.5.
If it goes down to a 2.1 and you locked in at a 3, you still have to keep the 3.
Yeah.
You can't get the 2.1.
Exactly. Once it gets guaranteed and you lock your loan, doesn't matter
if it goes up or down.
So you do risk, like Michelle pointed out, you do risk that if it goes down to 2.1, that you can't get that super low rate because you already locked in for a 3.5. But if the rates go up to 10, 12, whatever goes up 20%, the bank cannot legally say that, hey, you have to give me this new rate. This is the rate now. They can't do that. You guaranteed me. I locked in. Now, locks, they happen for different time periods, meaning we have 15-day locks, we have 30-day locks, we have 60-day locks, we have 90-day locks. So your loan officer has a array of tools, like think of Batman and his toolbox, his tool belt. Your loan officer has a tool belt too. And they can say, okay, based off the how files are moving, I don't think a 30-day lock will be enough. I think we need a 60 or a 90-day lock. And they'll speak with you and say, okay, we want to go for a 90-day lock. Now the bank is gonna go, you want 90 days? Okay, let me run some numbers. That's my calculator. I don't know, I did a calculator with 2 hands. Should have did it like that. That looks more like a calculator. Now the bank is gonna go back and run some numbers and say, okay, I'll give you that lock, but you might have to pay some money. Now each bank is different. I can't tell you how much they're gonna charge you or what they do based off their calculation, but it's based off their numbers, not mine. And the bank will say, okay, I'll give you that rate and that lock for 90 days that you want, but your borrower might have to pay $3,000, $4,000. So that's when the borrower has the decision to say, hey, is it worth me paying $4,000 to guarantee my 3.5, or do I want to roll the dice, no CELOs, and see what happens in the market? Now, the reason why I'm doing this video, and I'm just trying to inform you guys, my job is to inform you. I'm not telling you what to do. I'm just giving you guys information. The Fed's already said the rates are going up. They said that next quarter, meaning at the end of March, the rates will be going up. The Feds are saying this. So if I was doing a file, which I do a lot of, what did I do to my clients? I locked them last week or 2 weeks ago?
Yeah.
Locked in. I locked them 30 days. I'm not playing no games, and I'm not taking any chances with the Feds right now because rates tend to go up. It's tax time. The Feds might want more money. They like, we've been giving out too many stimulus checks. We're doing out too many PPE loans. People are scamming. I want my money, and I want it now. That's what the Feds are saying. So what did I do? I said, no. We're locking our clients in now. 30-day lock. Boom, boom, boom. So now I'm sleeping at night. I know my clients are guaranteed their rate. They're happy with the rate. It was better in the summertime, or it was better 2-3 months ago. But unfortunately, their file wasn't ready. They didn't find their house. Whatever the reason was, we couldn't lock them then. But as soon as we started noticing that the tides were turning and rates weren't going in a direction, the rates weren't going in a direction that was favorable for our clients, we did the next best thing, which is locking the loan and protecting our clients from hitting these harsh realities of these high rates. So one of the things I want to tell you guys is not only to be prepared for this, so you know now, but also you have to understand that not all loan officers are created equal. So make sure your broker, your loan officer is aware of the market. They have to actually be studying this and pay attention to these news. Because if they don't pay attention, they won't realize that, wait, rates are going up. The Fed just released this information on CNN. CNN is covering this. If you Google mortgage rates, you'll see the CNN articles. You'll see these articles going on. So you want to make sure your loan officer is actually knowledgeable of what's going on in the market, in the stock market overall. Not just knows about mortgages, but he's paying attention to the field of real estate.
The economy.
And the economy, thank you. So he can better guide you. And that's why I do these videos. That's why I have the Marcelle Minute, so I can give my clients updates every month, every Monday, on where the market is going, what's going on with real estate, stuff like that. So if you're not a part of my Marcelle Minute, please just put in the comment section your email. Matter of fact, DM me your email, because I don't know if you want everyone on YouTube to see your email. I don't know how personal that is. So make sure you DM me, The Real Mr. Marcelle. Put your email address, and I'll actually start sending you my Marcelle Minute, and you can join the team. Every Monday, they get a Marcelle Minute, which gives them information. First of all, we give a joke. It's usually funny. Shout out to my sister. Boom, boom. Not saying your name, because I don't want you to go anywhere. But we do a joke. We give you updates about the market. You get updates about my social media. And you get little inside things that I'm doing that I don't usually share on YouTube or TikTok or Instagram. These are things that I specifically have for my Marcelle Minute followers and subscribers. Now, another good thing that you can do, before I go any further, make sure you subscribe, and please click these other videos up here. You can see I have videos about how to become a top producer loan officer, my mortgage predictions for 2022, and I give you tons of value. So the least you could do is just watch some more of my videos. I'm giving, right? That's a trade-off.
I think it's a good trade-off.
I'm not asking for any money. Just watch my videos.
Give and take relationship,
It
guys.
does, because it helps YouTube. It helps the algorithm. It shows that my videos are important. It helps me find find more people so I can share my knowledge
and
my
see what
information.
you guys like, so we know what content to create more of.
Exactly. So as I was saying, another thing you can do is obviously you want to make sure that you're paying attention to the market. Your loan officer knows what they're doing. They're paying attention to the economy. 3, you want to make sure you're subscribed or you're getting email blasts from the Marcelle Minute, because it's going to help you and give you updates. 4, you're going to make sure your loan is locked. Your loan officer locks your loan in, especially when he sees that the rates are going higher. 5, you have to make sure you understand what that means, though. You have to understand that, hey, if the rates go super low, I can't get it. If it goes super high, the bank has to guarantee me.
It's not a gamble if your loan officer knows what they're doing.
Woo, I like that. Give me a pound on that. 100%. Especially if you're paying attention. So nothing is concrete. By all means, I could be 100% wrong. Nothing is ever concrete. But if you have most of the facts, if you have 90% of the facts, I'll go with that chance. So that 10% chance, I'll risk it. But 90% of the chance, I think the rates are going to go up, because of all the homework that we've been doing. I've already seen the rates increasing. The feds are releasing more articles about that. The market is changing. The loans, what's going on with the economy, it's all leading towards rates going up. The stock market has been falling. It leads up to rates going up. So all the signs are leading to it. So I could be wrong, but I'm going to hedge that I'm right. So we'll see on the end of March, see if I'm right or wrong. And you guys can be the judge and be like, hey, Malcolm, you was wrong. Or you can be like, hey, Malcolm, you were right. You're a genius. And it's like, no, I'm not really a genius. I just pay attention to the market. Now, last tip. This is the last tip I'm going to give you that can help you when the rates are going up, and you want to make sure that you can actually get a house and stuff like that. Be prepared, guys. Now, if you're watching this video and you're like, oh, I want to buy a house, blah, 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 but you're now starting your paperwork, it's too late. You don't have enough time to get your loan officer all the paperwork, to find a house, to find a realtor, to find an attorney. Be prepared. If you were prepared, this wouldn't be a shock for you, because you still have time. If you're not prepared, right? Even if you did find a house, right? You found a house that you like, you want to go get for it, but you don't know where your tax return documents are. You don't have your pay stubs. You didn't even get pre-approved yet. You haven't got your credit run. You don't even know what your credit's looking like. You're too far back. And then people are making offers on the house right now with a pre-approval. So what? In 2 days, you're going to get all these paperwork. Then we find out your credit is messed up. You need credit repair.
That is true. That is
You're
true.
missing
And you're in
the
there for
opportunity.
another 60 days or so.
Exactly. You're missing the opportunity because you weren't prepared for it. The best thing is not to wait to go to battle. It's to be prepared for the battle before it comes.
Ooh,
I like that.
You dropping gems. Okay.
Gems. Like Abraham Lincoln, this is a quote I do like. Abraham Lincoln said, if I had 8 or 10 hours to chop down a tree, I would spend, I think he said, if it was 8 hours, he'd spend 6 or 7 hours sharpening his blade and an hour to chop the tree. Because once the blade is sharp already, it's going to go through like butter. So now rates are coming up, but you were never prepared for it. You didn't sharpen your tools. You didn't have your pre-approval ready. You didn't know what your credit was. You didn't have your tax returns. You didn't have your document. You don't know what loan officer you want to go. You're still figuring out, who am I going to use when I'm right in front of you.
Ooh.
So you're not prepared enough. So yeah, you found a house that you like, but you're not prepared. So someone else who's prepared is going to come by, put the offer in, have their realtor, have their loan officer, get their loan locked, and boom, you'll still be looking. So make sure you sign today, or you sign up today. I have a link in my bio. Click that link. Let's get some talking. Let's get some calls going. Let me help you. Let me help make the mortgage process simple, easy, and quick. That's it.
Over and
Out.
boom.